Dollar gains on hawkish FOMC minutes, stocks mostly lower. Wall Street stocks closed for a second straight day on Tuesday amid persisting inflation concerns. On the data front, U.S. home builders started construction on homes at a seasonally adjusted annual rate of 1.57 million in April, representing a 9.5% decrease from the previous month. As such, the Dow Jones Industrial Average fell by 0.78%, the S&P 500 ended with a loss of 0.85%, and the Nasdaq Composite slipped 0.56%. Tracking a decline on Wall Street, Asian shares fell on Wednesday. Investors were nervously awaiting the release of minutes from the latest Federal Reserve policy-setting meeting. Australia's S&P/ASX 200 fell nearly 2% despite the report showing the country's wage price index rising more than expected in the first quarter. Japan's Nikkei 225 shed 1.28%, while China's Shanghai Composite fell 0.51%. Markets in Hong Kong and South Korea were closed for the holidays. European stocks closed lower on Wednesday, with the Pan-European Stoxx 600 ending the session down by 1.5%. Regional equities posted their worst daily fall in 1 week as investors grew worried about rising inflationary pressures. Of note, UK inflation more than doubled in April, with consumer prices rising by 1.5% after a 0.7% climb in March. On Wall Street, stocks closed mixed and Treasury yields rose as minutes showed Federal Reserve officials were cautiously optimistic about the U.S. recovery at their April meeting. Some officials signaled they'd be open at some point to discussing scaling back the central bank's massive bond purchases. The S&P 500 index dropped 0.3% after recovering from a 1.6% slide earlier in the day. The Dow Jones Industrial Average fell 0.5%, and the Nasdaq shed less than 0.1%. The yield on 10-year treasuries advanced 4 basis points to 1.68%. Meanwhile, digital currencies fell sharply as China's Banking Association issued a warning Wednesday over the risks associated with digital currencies. Bitcoin's price dipped briefly under the $30,000 figure before rebounding to the $40,000 figure, still well below its all-time high of over $64,800 reached a month ago. Other cryptocurrencies held double-digit percentage losses. Today in Asia, stocks were mixed after benchmarks closed broadly lower on Wall Street in the third day of retreat as investors weighed Federal Reserve minutes that flagged the possibility of a debate on scaling back asset purchases. The Nikkei 225 regained lost ground, edging 0.2% higher after the government reported that exports rose 38% in April from a year earlier, while imports climbed nearly 13%. Sydney's S&P/ASX 200 surged 1.27%. In Hong Kong, the Hang Seng skidded 0.42%, while Shanghai Composite slipped 0.18%. Seoul's Kospi declined 0.35%. In currencies, the greenback rose sharply as the Federal Reserve delivered a hawkish hint on outlook for its monetary policy. The Euro-USD dipped from fresh multi-week highs around 1.2245 down to 1.2170. However, the pair managed to bounce and was seen just below the 1.2200 figure ahead of the opening bell in Europe. Meanwhile, oil edged up after slumping to the lowest level in 3 weeks, with traders also concerned about growing supply from the US and Iran. Brent crude dipped to the $65.20 area before bouncing above $66. The Energy Information Administration reported a crude oil inventory build of 1.3 million barrels for the week to May 14th. In gasoline, the EIA reported an inventory decline of 2 million barrels for last week, which compared with a build of 400,000 barrels a week earlier. Crude oil prices plunged early in the week on news that the US-Iranian talks on the nuclear deal were progressing. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.